All right, let's go over the freshly frozen pizza part two. So yeah, there's a couple of ways you can go about it. I just added the November journal entries at the bottom of October on the same tab. But yeah, and you can add a separate tab. But I'm going to show you just how having it on the same tab. So you should have come up with the journal entries. These are the ones spent $75. That should have gone to marketing expense and cash. Purchased ingredients should have coded to debit to inventory and then credit to cash for $6.75, and then received the order for 128 pizzas. And the way I did this one was $6 sales price. This should have gone on accounts receivable. Let's read what. Let's read here. What's that? Oh yeah. What did you say? It's on. Yeah. We could read that. Where is it on the assignment? Oh, okay. Yeah. Yeah, gotcha. I'm with you. 400 square foot space, annual gross lease at $18 per square foot. Gross lease cost means the rent includes all utilities, insurance, property taxes. Previous. Yeah, so there would not be. Actually, no, I could hear a case for that. Yeah, tell me your logic. Yeah, actually, I think I could hear a case for that. Yeah, I think, yeah. Did you really? Uh, let's go through it. Maybe, let's see here. Did I even code rent expense? I think I did. So you have the same totals? Let me make sure that this is, this is updated. How did you have the same totals? Wouldn't you have rent payable on yours? Yeah, because the rent expense. But on the balance sheet, did you have a rent payable? Okay. Yeah. Yeah, you're talking when you say balance, you're talking about the total liabilities and stockholder equity. Yeah, so the total liability and stockholder equity, this line, that is what you're talking about. That's what you had. Because I could see that because you would have the rent expense that would reduce your retained earnings. So yeah, would it the balance actually would be the same. Is this the balance you're talking about right here, the very bottom one?
Well, on your balance sheet, you have 1855, but on your 10-column worksheet, you have 1871 for the balance sheet, and 1871 is what I have.
That's the debits. So you're looking at all the balance of all the debits. So since you had rent payable is a credit, would be in the credit column. So that's why that would total. I think I'm going to be actually okay with your logic on that. I think I'm going to probably give an answer, a correct answer for both ways. So, all right, well. Let's see. Okay, yeah, I just wanted to confirm it did say they didn't get paid for that order. Am I right? Did I do that right? Okay. So it should be accounts receivable 768, sales revenue 768. Receive payment from the previous month's order. So that would be a debit to cash for 576 and a credit to accounts receivable. And then a paid off credit card bill for the previous month. So debit, credit card payable, and credit cash for 480. Any questions on those journal entries? Okay. So yeah, what I did is I just added on to this spreadsheet, this 10 column. So starting in column J, I just added new columns. So I added these new columns, J through Q. And we can go through and see how to calculate this. So this J and K represents the updated, it should be the October and November balances. So what I did here, I just did another pivot table for November. So you see, I just grabbed this, see how I'm just grabbing the November data right here? And to make a pivot table just for, so this highlighted amount, that's only the activity that was for November from those journal entries that we just performed. So cash should be $236 if you reflect October and November transactions. So you can get that by, I mean, we can just go link even the pivot table. So go to cash, it would be the October So remember what I did for October? I did the sum of the debits minus the sum of the credits. That's for October. Then I'm going to add the sum of November debits for cash and then subtract out the sum of all the credits that hit cash account. It should equal 236. Any questions? Y'all are following me on that? So you do that for every one of these accounts. And if you go through that drill for every single one of those accounts, the sum of all the debits and credits for October and November equals 768. Do you want me to do a link, or you guys follow me on that? Okay. So you do that for every single account to update the trial balance. Same thing for the sales revenue. So, once again, you would add up the sum of the credits for October and then November. Were there any, I can't remember, were there any new accounts that we hit in November? I think. Well, maybe like for rent, like for you probably had rent expense. So if you have a new account, then you'd have to just be sure, to add that in. Cause I'm not sure cause see over here in column A, we don't have we didn't just, if you have a new account that hit in November, you're going to have to add that row into this spreadsheet. So keep that in mind also for part 3. I can't remember, there might be there's going to probably be a new account that you're going to have to do. So you're going to have to, if it's an expense account, add it down here, rent expense, and be sure to add the columns. So the adjustment, so you see over here, column M and O, it's the month 2 adjustments. You you do those entries just like you did for October. So we have one here for inventory adjustment. So we debit cost of goods sold and credit inventory for 288. Did you guys remember getting that? Do I need to calculate that, or? Okay. And then depreciation is another month of depreciation, which was $8. The only thing on depreciation, I can't remember on part 3, but if you add more equipment or not. But if you purchase more equipment, then your depreciation calculation is gonna change. So keep that in mind. But since we didn't buy any more equipment, the depreciation was just the same as the prior month. So then in column P and Q, it's the adjusted trial balance. So really, it should just bring over what you already calculated in column J and K, because remember here, you calculated October and November's data. So this adjusted trial balance, it should be the same as a trial balance, except for these lines that you did adjusting entries for. So if you remember this inventory row, you need to add what you have on your trial balance plus that adjusting entry. So 675 plus the 288, or I'm sorry, that's a credit. So that should be 675 minus 288 equals the 387 inventory balance. And then this accumulated depreciation is 16 because you add this trial balance amount credit, and then this was a credit, so you'll add them both together. And you go down and calculate the adjusted trial balance balances, and then I think these rows, if you were using these rows or columns, it's the same. You're just pulling this from the adjusted trial balance from month 2. Don't pull it from month 1. So then you take those balances and then you prepare your income statement. And this is what you should have got. Well, unless I guess you did rent, which I think there is I actually kind of like that thought. Yeah, I guess your thought was on the rent because there was no date that was given. It just said they.
It was due December 1st.
It said it was due. However, it said they got into contract that month, right?
Mm-hmm.
So, or there might not have been enough information to really know, right?
Like, we don't record future expenses. There must be a way, but usually.
It says here, the Wilson signed a lease for a 400 square foot space. Annual gross lease cost 18 square feet. Previous tenant had left it installed. Refrigerator equipment, freshly frozen. Could move into the. Oh, here. Actually, you might have more of the right answer, to be quite honest. Because it says freshly frozen pizza could move into this space immediately. So that assumes that they could move in November. And so I think I could see a case for either way. Like in your logic, this is hopefully what you were thinking. You're thinking, okay, I actually am in an agreement for this lease space because of that word. It said they can move in immediately. So you accrue an expense. And so you're assuming the December 1st payment is actually covering November's rent. Is that your thought process? Yeah. And then the other people's thought process is, okay, well, even though they could move in November immediately, I'm assuming they got free rent. And that the obligation doesn't start until December 1st. And so I'm glad you brought that up because I don't think I should take off any points for that actually. So yeah, I think both ways can be correct because of the nature of there wasn't very specific information given. So yeah. I don't know. Does that make sense? Any rebuttals or arguments on having both thoughts? That's a prime example of like there could be cases that are vague like that, and so it's a matter of financial statement prep. Whoever's reading the financial statement. I don't know. Maybe I think I should probably update that case study to probably get more specifics. But I like a part of the case studies actually make you think like that, to make you think that.
Because they had equipment that came with the building, and I'm like, does that need to depreciate?
How would you treat that?
And like,
Become an asset of theirs?
Did it
a lot of
Commercial, the commercial freezer.
yeah.
Maybe they're past.
So there's no depreciation involved because you're not you're leasing the space. So in a way, you're even leasing that equipment, and so it's just like any space that that's sometimes actually that sometimes actually happens in real life. The landlord owns it, so it's on the landlord's books. Who's depreciating the building and the equipment. Yeah, good thought.
Or would it fall if you had to do like maintenance on it, or would
Yeah, so if you were in charge of maintenance on that equipment, then you actually expense maintenance. You would have maintenance expense on your books. Um, good questions. Those are good thoughts. Any other thoughts? So
So it's not an asset at all.
what, the rent or the, nope,
Because you don't own it.
correct. The time it would become an asset is if you are prepaying your rent.
Okay.
So it would go in as a prepaid asset. Remember that back a couple weeks ago, or maybe first week. That's where you prepay the rent, and so then you're expensing the rent off the books. But this has you're not capitalizing the assets. So when you do the third month, if you're using this spreadsheet, then I mean, you might consider adding more columns. So adding, how many columns? Add enough columns to add for month 3, and then you can just update this spreadsheet. Or Van, or if anyone else, you have 3. Actually, did you end up using this 10-column worksheet? You just did the journal entries on 2 different tabs, and you added, yeah. So yeah. Questions on rolling forward to the month 3, and are you understanding now? Like, is it clicking that like this month 3 is going to be a year-to-date balance of it's going to include October, November, and December, all 3 months? Is that making sense to you? I got a couple people emailed me. I guess they were confused on like capital. Does the stockholder equity just carry forward that balance? And the answer is yes. Like all these balances carry forward whether or not you had any journal entries hit that account in that month. You still gotta roll. You gotta include all the journal entry data from all the months. The time that, like at the end of the year, when you're closing the books for the year, that's when you're closing out all those balances, and the only thing rolling forward to like the next year is going to be your retained earnings and your balance sheet items. But all your income statement items, those reset because it's a new year. But all the balance sheet items, all your assets, liabilities, owner's equity, all those balances roll forward to the next year. And then you start afresh and hopefully make some profit, And so the income statement items are resetting to 0 once the new year starts. All right, any other questions on pizza?